If you do Sub2, they're coming after you. Well, maybe not, but there is some stuff going on right now out in Arizona that we're going to talk about today that may or may not change how you do Sub2 or if you do it. But that's what we're going to talk about today on the Sub2 Deal Show. Hey, lead grabbers, welcome to this episode of the Sub2 Deal Show, where we talk about all things subject to and creative finance. If you're listening to our show on one of the podcast mediums, maybe Apple or Stitcher or Google Podcast, and you'd like to watch, because we video these things now too, you can check us out at sub2tv.com. We put out a lot of other videos as well, not just podcasts, and it's always something to help you with your real estate investing business. So go over there and check that out as well. And listen, if you haven't yet, check out my new book. We just released this book this past week. It is actually the model for our business, how we've run our business for the last 15 years. You know, the first 10 years, we did what most investors do. We tried a little bit of everything, and it was good. I mean, it worked out okay, but it was a lot more stress. And you guys follow me, you know that I like to vacation and take it easy a lot of the time. So we really narrowed things down to the things that we like to do and that were a lot of fun and the most profitable. And that turned out to be subject to and seller financing. So we really create paper these days. And the 12-house blueprint is all about it, exactly how we do it. And you can get that again by going to 12houseblueprintbook.com. So go pick that up and check it out. We got a lot of cool bonuses with it. The pre-launch is over with, but you can still get the book. So go check that out. Guys, what is going on in Arizona this past week? Man, they went nuts. And I don't know if you've read it or not, but the 81-page filing, the actual court document, is out. We're going to share a link to that in the show notes. Now, I don't know about you, but if you've ever gotten a divorce, been sued, you may have some experience with attorneys. And attorneys, well, they're like everybody else, I guess. They tend to twist things in a way that really benefits them. This 81 pages is really interesting reading. A lot of overkill in there, of course. They're suing every trust, every LLC, and apparently this guy was a real player out there in Arizona for several years. He's also a teacher. So there's always that added element when you teach people how to do things that maybe not are on the up and up. Now, listen, everybody is assumed innocent until proven guilty. So we're not going to mention any names here today. Well, like I said, we'll give you the link. You can go read it, and we'll wait to see what happens. Now, an interesting thing about this case, a lot of you listening to this, watching this, may not remember, probably because you weren't around. But in 2004, something very similar happened. Just a lot like this, not exactly like it, but a lot like it. In North Carolina, the attorney general there got really bent out of shape, really focused on subject to. When you read whatever, it's hard to find information on that now because it's over 20 years ago. But when you read information that you can still find online about it, their complaints were very similar. It really comes down to, and I'm going to go over a list with you. It really comes down to the similarities of misleading your seller, making promises that you have no intention of keeping. Those are the big things that we talk about a lot, and we tell you don't do them, basically. So I'm going to actually share a couple of things here that are the biggest problems. I actually thought about going through that 81-page document, paragraph by paragraph, and explaining what they're talking about and what it means to you. But that would be about a 2-hour podcast. Now, we may actually try to get a couple of attorneys on here that I know and a couple of investors in Arizona to talk about that here next week. I'm going to reach out to a couple of those guys and see what they think about maybe doing a live or something like that to really talk about it. But The biggest problems are, of course, lying to your sellers. Are you honest with your sellers? Um, and I've talked to you guys many times about this. We make sure that our sellers know. We speak it, we give them numerous documents that explain it again, exactly what we're doing. This loan is not going to be paid off in full. It may be paid off in the next year or two. It may go, and we use these exact words, it may run the full amortization. In other words, we may pay on it for the next 27 years or 29 years or 15, however many years are left on this note. We may pay it until it's done. And I've actually paid off notes before that way. They didn't have a lot of years left on them, but we paid on them until they were done. So it does happen. Another big one, and if you read this, and if you're into creative finance, if you do subject twos, you really need to take the time to read this 81 pages. Like I said, it's really skewed. Now, if these people did the things they're accused of, they deserve what's coming. Did they do it? I don't know. It's really funny reading it. And Jody and I were talking about this morning, actually. And I said, reading some of the things they paint in a very negative light. They say that these investors would go to the door, knock on the door of people in foreclosure, and tell them they were there to help them with the foreclosure when they had no intentions of doing so. And I'll tell you, the first words out of my mouth when I knock on a door to people in foreclosure are, I'm here to see if I can help you. And I mean that in all sincerity. And we've helped more people by far keep their home than we ever have bought homes. Most people want to keep their house. Unfortunately, it's not possible for all of those people to keep their house. Either they simply can't afford it, they still don't have a job if job loss was the reason that they fell behind on their payments. There are many reasons why they can't. And part of what we do when we're there, when we go through our list, and we actually have a document that we go through with them line by line. Have you tried this? Have you thought about this? Have you done these things? We'll even get on the phone with their lender to see what workout programs are available, loan modifications, or anything else. So we sincerely want to help them if that's what they want to do and are able to do. Now, if that's not the case, then their next best opportunity may be to sell that house to us. Their next best opportunity may be to list it with a realtor. And I don't have a problem telling them that if that's what needs to be done. And we've done that many, many times. And still, yesterday, I told a fellow, listen, I'm probably not your buyer. You need to list this house. It's going to be a much better outcome for you. So we don't mind doing that at all. Now, another big thing, allowing lease backs. My goodness, that's a big factor in this case. They get a deed from a property telling the people that it'll stop the foreclosure. Sometimes they stop it, sometimes they don't. And then they allow the person to stay. Well, as soon as the smoke clears and everything settles down, the people can't pay, so they're evicted. Now, obviously, they're irate. They thought their house was being saved, but it was just a temporary thing. All through this document, we're led to believe these investors, the defendants, coerce everyone that they come in contact with, and their full intent is to rob people of their equity. And they have the most evil reasons to do these things. I don't know if I believe that or not. I believe that people in authority, people with power, tend to try to skew things, obviously, their way and want to make someone look as bad as possible. And if you've got experience with attorneys, you may have some experience with those situations, so you understand what I'm talking about. Another key point here is full disclosure to the sellers, again, regarding the loan. We talked about that. And then another thing that you and I have talked about many, many times is memorandums to cloud title. These people immediately go file memorandums where the sellers are really just stuck. They've got a memorandum that's recorded. They can't take other action if they were able to get a refinance some way. are able to sell that property. They run into roadblocks with those things. So I tell people all the time in these Facebook groups, and I see these people talk about sellers trying to back out of the deal. What do I do? Well, 99 times out of 100, your best course of action is to let them go. All right, so you don't run into problems later. If my foreclosure, and we're focusing on foreclosures because apparently this Arizona Attorney General, they really focused on people in foreclosure in this lawsuit. People in foreclosure, if I have a seller that's signed a contract with me, agreed to sell to me, and a few days even before we're ready to close, say, listen, so and so came through, I can keep my house, my aunt's giving me the money, my parents, my kids, whatever. Be happy for them and let them go. If you work local, and I realize that a lot of investors out there work remote, and I did for years, I understand. It's different when you're remote. Apparently, these investors in the Arizona lawsuit were local. There was a big group of them. They did extensive door knocking, had crews that did the door knocking. There's just so many things that if this article or this document is factual, we're just done wrong. And you shouldn't be operating your business that way. If that's the way they were operating, they shouldn't be operating that way. But I guess it all remains to be seen. There are over 70 defendants in this case. They have a big problem, apparently, according to the filing, with the fact that investors use trusts and they use multiple entities, which they claim are to conceal true ownership. Now, we use trust. We use trust for privacy. We use trust to discourage frivolous lawsuits. We use LLCs for, protection, for asset protection. Now, these entities are all available to use. They're all, out there for those purposes. But apparently, if you're an investor and you use them, it's because you're a crook. Now, like I said, I don't really know. I'm going to post a link so you can download and read this PDF of the filing, and I'm also going to post a link to a well-known trust attorney in Florida who has had some commentary on it. Now, a few things that he covers that could be a potential problem, of course, that we've already gone over some of these here. Failure to disclose the material terms. Homeowners are misled into believing they were completely off the mortgage when in fact they remain on it. Now, we've already talked about that. Fraudulent use of subject-to agreements. Now, this particular trust attorney believes that you should notify the lender of what's taking place. We don't do that. Now, I'll tell you why we don't do it. Because in my opinion, that's just on a need-to-know basis. There's a due on sale clause in almost every mortgage that you're going to take over that is a contract agreement between your seller or the borrower and the bank. And the bank's just making the borrower aware that if they transfer title, the bank has the right to call the loan due. Now, you should have the means to take care of these problems if they come up. Can you refinance? Can you find the money to reinstate this mortgage or pay it off or do whatever that you've got to do? Most banks, I believe, will let you take over the payments on that mortgage. They may change the interest rate. There are all types of workouts that you can try to do with the bank. But this particular trust attorney thinks that you should notify the mortgage company. Like I said, I don't really go along with that one. He says there's a problem with the use of LLCs as your trustee, that the trustee should truly be a third party removed from the transaction. So if you don't fulfill the terms, the trustee can deed the property back to the seller. That might be a good idea to make sure that you're using a third party. Does that mean that it can't be a relative? It can't be somebody, a friend of yours, perhaps? That's going to be a problem with finding a trustee unless you actually hire an attorney to be the trustee. And that may have a little bit to do with his stance on it, since that's his job and what he does. and then the unlawful evictions. Title companies, that's an interesting thing about this lawsuit. They've actually named some title companies and some attorneys. In fact, a very, very well-known creative finance attorney has been named in this lawsuit, which was really surprising, to say the least. Their assumption here and what they're trying to imply is that these title companies and these attorneys were also criminally involved in some way to do this. But it's really interesting reading. They go back to, as far back as I saw, was 2019, when this particular individual, the main person in the lawsuit, was teaching creative finance and how to buy properties and do those sorts of things. So some really interesting reading. What is this going to mean for us going forward? We have, for the last several years, videoed our closings with our sellers. And we do that for a couple of reasons. The main reason being that we wanted to make absolutely certain that our sellers understood beyond any shadow of a doubt what the transaction involved and what would be happening. But we're going forward, we will be videoing every interaction that we have with our sellers. In other words, we already record all of our phone numbers, our voice lines are all recorded. And we do that for a variety of reasons, for accuracy and taking notes after, for getting the information loaded up into our CRM, and also for transparency. Our people know this, our callers know this, they know that we record our calls. We also do recordings when we door knock. I wear, and I've shown you guys, I've done a video on this, I wear a small video recorder that is very visible. I pin it right here to my shirt. It's got a little flashing light on it, and I record all of those transactions. And I've done those in the past primarily for training purposes for our students, how to door knock, what to say to people, what to expect as far as a reaction. But we will, moving forward, when we step inside the house, bring attention to the recording and keep it going, and make sure that when we meet with our sellers to sign a contract, to do any paperwork, we let them know that we will be recording. And it's really for their protection. It's just to make sure that we said everything we were supposed to say. We were totally transparent with our dealings with them, and that we're going to have those things going forward. So we are going to move in that direction just to make sure that everybody is on the same page. But I'm telling you, you have to, equity stripping. What is equity stripping? That's mentioned a lot in here, in this filing. If I buy a house worth $300,000 for $150,000 because a seller tells me, I don't want it, I don't care what you do with it, I just want out of it, or I want $5,000 and you can have it. Both of those are incredible profit margins. Does that constitute equity stripping or equity skimming or whatever it is they decide to call it today? I don't know. I've made deals like that just in the last couple of years here in Arkansas, where I took them subject to, where I paid cash for them. I had a lady sell me a house last year for $40,000 that we sold the next day for $150,000. Now, that was a cash deal. I asked her what she wanted, and she told me. And I was happy to give it to her. It worked for me. Do I have an obligation to say, hey, wait, you're leaving a lot of money on the table? That doesn't sound like a real negotiation to me. I know if I go to a car lot today to buy a car, and I've done my research, and I know this particular car that I want, the blue book on it's $30,000, and the salesman says, we'll let you have it for $20,000. That's 2/3 of its value. Is my responsibility to that car salesman, listen, I think you should charge more because you're giving me a heck of a deal on this car? Well, of course not. But what's the difference in a house and a car? I don't know. I don't know where they make their decisions on it. I tell you, our political system and our judicial system is so screwed up today, it's hard to say. But the bottom line here is you need to be very careful in how you're running your business. Make sure that you're very transparent with your sellers. They understand exactly what's going on. There's nothing wrong with Sub2. It's not illegal. I don't see it being illegal anytime soon. Buying and selling, doing commerce, that should be pretty free. But I'm telling you, there's some stuff out there. Watch what you do. Be very careful. Be very careful who you listen to as far as what is okay, how to handle people. Make sure your contracts are fair. I'm telling you, I've seen some contracts that have unconscionable penalties for sellers if they don't do certain things. There's got to be give and take. There's got to be fairness in what you do. But you will find people that'll give you a house with an incredible amount of equity. That doesn't mean you're a criminal. But apparently these days you have to prove it. So make sure that you're fair in your dealings with everyone, that everyone knows exactly what's going to happen next. And if they're not okay with it or they want to get out of it, let them go, because the next deal is tomorrow. That's just the way it is. So hope that helps. I'm telling you, man, there's some crazy stuff going on here. We're going to try to pull together that live or another podcast with an attorney or two, and then some people out in Arizona that can give some commentary on what's going on, and maybe actually know some of these people that are named in this lawsuit. Apparently they were some pretty big players out there. So we'll see what happens. So hope you guys are having an amazing week. Remember the 12 House Blueprint book. It's $20, man. You can't beat it. 177 pages. I spent a few months putting this thing together. It's how we do our business, pretty much A to Z. So go check it out. So we'll talk to you next time. Get out there, talk to some sellers, buy some houses.